Right, going live, going live, going live. That's the stream here. You up and running? Oh yeah. Okay, good morning traders and investors. Welcome to another live right here at wealthdome. We're going to do now a before the bell edition as we do on almost every day. Last week I had a couple of meetings, so I missed a couple of live events. Sorry about that, but we're going back to the schedule now. So let me just silence this guy right here, and that's me. I'm earbuds. Okay, so let's do a rundown of the major market indices. Then we're going to do a smaller market recap of last week, biggest pre-market movers, and then we're going to go over a couple of trades. So let's add a couple of stocks to our trading list right here. First of all, the futures are looking open positive, but only with 0.07% on the S&P. So be very careful. We're going to have a heavy week in front of us. Also, the NASDAQ is in the positive currently, wants to open higher. Take a look at the Dow Jones in the positive. In the pre-market is the ETF, and also the Russell is massive in the positive. Now, this is all due to rate cuts. So this week, the Federal Reserve is expected to cut rates with 0.25%, but we have to take a good look at what they're going to say. So pretty bullish market here. All major indicators, all major moving averages above one another. So that is bullish. Let's take a look at the VIX, which is up today. Okay, I just wanted to say, I had a look at the VIX a couple of hours back, and it was down, so almost negative. Now it's trying to turn around. So volatility coming into this week. Come on, volatility. I love volatility. Hopefully not a major spike like we have here. We had here on the 25th of November, then on the, on the 20th and the 21st of November, then we came down. But I am expecting volatility this week, so be very careful with your trades. Also, the dollar down at 98. Beautiful pullback here. No support for the dollar. This is getting interesting. I'm expecting the dollar now to come back down to 97-ish and then to have its next leg up. So I don't think it's going to retest its prior high, lows of 96, but 97. If it comes down to 96 and breaches that level, then we have a problem. But I do believe it's just going to come down to 97, even less 98. And if it does that, then we're going to take a look at the next leg up higher. That means a couple of good trades here for Forex, a couple of leaps maybe for the dollar. But I'm getting ahead of myself. Let's take a look at oil. Oil beautifully down here. Is this setting up for another strangle? So we have had it here. Last time did I put on a strangle? Actually, it was here. And my strangle is working out beautifully right now. Maybe $500 or something like that in the positive with my strangle. Towards 2,000 is the maximum that I can have, but I'm thinking of taking up, down either at 21 days or at 50%, but I think I'm going to reach 50% even earlier in the trade. I have it in a long, for like 70 days or something like that. Moving on to natural gas. So for those of you who follow me on my Substack on the paid version, you know what I did here with natural gas. This trade is working perfectly right now. Natural gas is currently having a pullback. Keep an eye on the red line here, which is at 4.6. And that is where I think we're going to find support again for natural gas. Now, if this is going to break down completely, then bygones, bygones. But natural gas currently really bullish, looking for a pullback and a retest, and then maybe the next leg up higher. We are in the cold season right now, so why not natural gas upwards? Gold, on the other hand, is, as I said, gold is, although it has lower highs, no, wait, it has higher lows, and the highs are, it's pretty interesting how it's working out for now. I'm still expecting gold to do something like this. Come down, retest this zone, and then leg higher, leg higher, and leg higher. But we just have to wait. Rate cuts are bullish currently for gold until something really bad will happen, and then is where we're going to see gold follow the stock market down, 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 if that will be the case somewhere in the far future. Not expecting next year to be the down year for gold, but it is going to come. Silver, on the other hand, damn you, silver, you should come down. Have a really negative, have a bearish play here on silver. Those who in the Substack already know what I'm talking about. Silver currently trying to push its 227 Fibonacci extension. I think it's going to go further up, but not right now. This is a play now on rate cuts. After rate cuts, let's see what silver does, and then we're going to take another decision on silver. Right now, copper, on the other hand, having a bullish day. I think it's going to come down here for copper, retest again this 21-day moving average, and then try his next leg up. But for now, copper is really bullish, expecting to have a pullback. Okay, Bitcoin, on the other hand, had a beautiful green day. So I'm thinking here on again setting a call against my long leap. If you want to get into Bitcoin, once again, this, I don't care if you add it here, or if you're waiting for another pullback, just dollar cost average into Bitcoin. Not financial advice. Not a financial advisor. You may lose everything that you have, everything that you invest. Don't listen to me. But in my opinion, Bitcoin is just preparing itself for a beautiful Santa Claus rally, exactly like Ethereum does. So that's it for the major movers here. Now let's take a look at some stock or options play. I'm going to go now to Tasty here. So we already took a look at the SPY. And I have prepared for you, beautiful people, 5 plays. First of all, Amazon. You can see, but AMZN, Amazon is beautifully set up here for a strangle. Or just want to sell down the puts at the lower end of the Bollinger Band, feel free to do so. But right now, Amazon, if you have the buying power, let's take a look at the options tab here. Now, if you're talking about strangles, we could do 2 things. Either 40-day or 39-day, in our case, the monthly expiration, the 74-day. So let's see, where would we land? A strangle right outside of the expected move for the 39 days, January 16 expiration date. Let's see, the 210, selling the put here, and selling the put on the 250 would take you 2060, or it would take me, because this is really interesting. So the way Tasty does this, it's applying some sort of quick calculations. So you could see a buying power effective here, or how high your buying power would be affected. It kind of depends on your margin, on how much money you have in your account, how much buying power you have, and it's kind of a risk assessment for them. Okay, so you would put up $2,600. Let's just round them up, $2,600, and get 400. So that's 20%, almost 20%. Almost 20% return in 40 days for the strangle. Now keep in mind, volatility is low, 12.4. This could change. This has a volatility spike, then you're going to have a problem. Also, we are not delta neutral here. So because I'm selling here the 16 delta, I would need to come down here, go upwards to 255. This would take up more buying power and give me less return, but I would be delta neutral. Meaning if something happens, it's not going to affect the prices here that much. So for each movement, is only going to affect me with 0.58 cents. Okay. So wait for the opening. Take a good look at Amazon. If you want to sell a naked put underneath its 200-day moving average, 219, that is outside of the expected move, that is also before 1 standard deviation, then it would cost you, let me just take up down this leg, getting 218, putting out $2,500. I would say this would be even the better trade for those who want to own Amazon, because if this goes sour, you would be assigned with Amazon shares. And well, it's not so bad. At 210 Amazon, I would buy it. Why not? If you want to, actually, that's outside the 219, that was higher, 213, it would be at 210. So the probabilities are really, really low for Amazon to hit the 210. But if some kind of bad news comes out, then you're going to be assigned those shares. If that happens till that expiration. Okay, next up, we're going to take a look at our favorite, NVIDIA. Now, I already own a leap on NVIDIA. NVIDIA is currently at 47 RSI downwards, but it's trying to do an upward movement. The buying signal on the MACD is trying to be triggered. It has only the 21 and the 50-day moving average above it, and they're kissing perfectly right now. Underneath of it, it has a lot of support. It has the 100-day moving average. It has the Bollinger Band, and it has the 200-day moving average. So I would be not surprised if NVIDIA breaks out here and somewhere later on retests this zone again. But it's beautifully set up for a breakout. So selling some puts down here. And it's actually also beautifully set up for a strangle. Now let's take first of all a look at 40 days selling the naked put. We have at one standard deviation the 158 strike. So once again to the diagram, 158, that would be even underneath the Bollinger Band and even underneath the 200-day moving average. You're getting a lot of juice here. So 160, let's see, 162. I would go with 160 or even 162, even if it comes down to 162, only a couple of days. And I know, so if it's way before expiration, so if it comes down 162, then I know it's going to also go upwards. Now, this is not showing me anything because I have the long leap, so I have to sell, first of all, this, and, well, need to then add to this $300 or $200. Actually, you're adding up. So let me just explain what is happening here. Because I have this leg, it's showing me 300 and getting you, okay, now it's working. 3,000 you would have to put up with the possibility of being assigned some shares. So also let's go a little bit higher, 3,000 or 3,400 to put up for that 162 strike, where you would get to $276 in 40 days. And I would expect this to go up in the next couple of weeks, and you would get at least 50% from it and get back your buying power. A strangle, on the other hand, because it is setting up for a beautiful strangle. So let's see. I'm going to remain here, 162. So that's a 18 delta. Let's look for the 18 delta on the call side. Where's the 18 delta? We don't have it. So let's try with 21 delta. Getting a 2.79 delta negative or a 2.08 positive. Really dangerous here, but it's outside. So this could go up, but it also can come down 210. NVIDIA could hit 210 easily. Okay, so in 40 days, 210, which is up here, would be almost a new all-time high. So be very, very careful on selling the strangle here. I would just sell the naked put, honestly. But hey, do your own research, do your own thing. Either a strangle or a, because I don't think it's just going to go up. Sometimes it's going to come a little bit down again, testing this line again. That is where you can just sell away your strangle. The problem is IV rank is really, really low. Kind of the best time to be buying options, not selling them. Hey, beautiful setup here for a naked put. Honestly, I don't think that this is going to crash down here. And if it does, owning some NVIDIA never hurts. excepting if you're really long in the trade and things go sour. Moving on to the next one. Now, I hope you already checked out my NFLX, and that is Netflix, the ticker symbol for Netflix. NFLX, already checked out my video that I released on the weekend where I kind of explained the move here for Netflix and Paramount. Check that one out. Come back and make a decision, a well-educated decision afterwards. So currently moving upwards because it kind of got a little bit oversold. So I'm seeing the pre-market that it's at 101. Actually not really right. Currently at $101 a share. Earnings coming up somewhere at the middle of January. So be very, very careful with this. But still, the 40-day or 39-day. We take a look at the diagram here, at technicals. I would say that this can still go lower. So what probably will happen, we're going to see a couple of green days on Netflix. I don't even think that it's going to hit this 21-day moving average. The Bollinger Band is opening widely here. So if it, right now, it's kind of a danger play, but you could. I already own some long time, so I own the shares in the future. I'm going to wait a couple of days. Let's see how this opens and then sell a couple of calls against it. If you don't own them, this is also probably a good possibility to open up. Let's go to the trades here. You see, I own the 400 free down here, $79. Go to 80-ish. Buy these, or 69 if you want. Be really conservative. Buy these and start selling calls against them. Worst case scenario, you're not going to get that much money out of your calls. Be very conservative. Only sell on green days. But Netflix is not going to go down to 69 in 1 year. Okay. Also good number, 69. It is going to go. So you're going to sell these. You always have to imagine yourself, if you buy them here, because you're buying the calls, so you're paying basically $800 something, $8,800 for, wait, why am I paying so much? Something ain't right here. I should be paying $3,800 for these calls. And then if, let's do a simple math. So let's say you buy the 70 and the stock goes up 10 ticks. So it's currently at 100. It's going to go to 110. Okay, so following thing will happen. You have to take those 10 points, go down and see where's the difference between 10 points on the strike. So the 10 points on the strike. So if this goes higher, then the prices go lower. And the 60 would be where you would sell this call. Okay, so this call will be now 47 or 48, let's say. So 48 minus 38 is 10. So you're going to get $1,000 out of this trade when you're going to sell your call again. Pretty awesome. Moving on from this, that's meaning, so you put up $3,800 and you're getting $1,000. That's over 15% return in one year. Yeah, roughly 1 year. And that's the minimum, because so everything can happen. It could also go to zero. It could also go further out. So this would be if it only grows 10. Okay, if it appreciates 10 and you also are able to sell monthly calls against it, then hey, I would say you're going to get much more than that, if not even double. Now, if it appreciates even more, then you're going to get more, and so far and so on. Okay, that's it for Netflix. Let's move on to the next one. We have two more. One of them is SoFi. SoFi also having its earnings actually at the end of January. Let's go to the 39. So here, setting up a triangle. So let's take a look at the diagram. It's currently triggering a sell signal. It already has triggered a sell signal. So I would say this is going to go down. Wait for a couple of down days on this fellow. Maybe today is going to open on a red day. If you have a beautiful red day on SoFi, you could start selling, because this week is going to become interesting. You can start selling some calls down here. Now I would take a look at the end of the Bollinger Band. Last time it kind of touched the Bollinger Band and then went further up. So let's take a look at trades here. 22. This is at 24. So I think we can sell the 23 and get ourselves. So it would cost, what am I doing here? It would cost $230, get $61, basically 30%. 30%, okay? We get 30%. And if you have the buying power, then juice this puppy up. Let's go, go, go. Let's sell 5 shares. Let's put up $1,150 and get $300 in 30 days, 40 days. And I would say take it down at 50%, so $150. And mwah, what a beautiful trade. Why not? Now, selling a strangle here, I would wait. If this comes then up, this fellow again, if it has a green day, then I would start selling. But it's not going to happen. It's going to go down a bit, maybe hit this 25 moving average, and then go upwards, and then start selling a strangle against it. So that's for SoFi. And the last one, man, let's just do it. I'm not doing this normally, but it's so juicy. Oracle. Now, an Oracle, because it has an 81 IV rank, and it's sitting there. But this one is dangerous, okay? So be very quiet. Because we are going to sell here a strangle on something that could move either ways like a crazy, out of control NASCAR. So let's take a look at 40 days. Not even 40 days. No, wait. I was looking at 11 days. Be careful with this. I would go out here, somewhere at the 7 delta, and then the 6 delta. Don't have any prizes. Let's go to the 8. Put up $2,000 and get 10%. But remember, this is in 11 days. So after their earnings, if they do not fall from 100 points, they have to fall 100 points to breach your put, or rise 60 points to breach your top. Then you're good to go. Because as soon as earnings are over, and you have 91 probability of making profit here, as soon as the earnings are over, this major IV rank is going to crush. The volatility is going to be crushed, and you're going to make money on one side or the other. Only problem being if it breaches one of your either your call or your puts. This is a very risky trade. It's a very rewarding trade. If you want to go crazy, they could go right here. Q upwards. Are we? No, we're not. And we're not delta negative. So you have to, and I'm going to take into consideration this negative delta. So we're going to lose money, but only for, because they have earnings this week. They have earnings on Wednesday. I would be careful to take this out off before earnings. Or, so if maybe you hit 50%, take it off before earnings. Because you're going to get here $676. Half a percent or 50% of 670. You're going to get free. If you get $300, take it off. Take it off. Take the money and leave. And if you want to wait, I wouldn't do this to wait. But if you want to wait after their earnings, then move this puppy. Where do you have the trades? Then move this puppy up to the 7 or even 5. So 7 and 6. Okay. Now, suddenly we have 8, but let the market open. Let volatility do its thing, and then choose what strikes you want. But I would be really, really careful with this. So this play would be, you're getting nothing here because there are no prices. But this play would be extremely dangerous because they do have earnings. Earnings this week. So we have a couple of earnings. We got nothing interesting, actually. Tomorrow we have a couple of more interesting earnings. Going to talk about them tomorrow. On Wednesday we have interesting earnings. One of them is Oracle. We're going to talk about Wednesday. So each day before the bell, we're going to talk about those earnings. Ladies and gentlemen, with this being said, check out my previous video, 2 videos. That's from Saturday, where I'm revealing my trades. I do the market review, expectations for this week, and what trades I did. Also on Sunday, I released the Netflix special, not a Netflix special, but my special video on Netflix acquiring Paramount Skydance, not Paramount Skydance, Warner Brothers. My God, Netflix acquiring Warner Brothers. Will they do it? Won't they do it? Who are the winners? Who are the losers? With this being said, I'm Robert Menhart. I build and protect wealth right here. Wealthdome. Take care. Bye bye.